Hey guys, Zaman
And Christina
from Our Rich Journey. On today's video, we are talking about day trading. And we have gotten this question so many times before on our channel because we have not addressed this particular topic. And we've done that for a very specific reason, which we will elaborate on in this video. But on today's video, we want to talk about what day trading is, the different strategies to successfully day trade, statistically, how successful are day traders, and our suggestions if you want to get started day trading. Oh, and one more thing. We want to answer the question that so many people have that watch this channel. Can you achieve financial independence and retire early by day trading in the stock market?
So there's this image or thought that people can become rich day trading, or at least at a minimum, just be able to pay their bills. But that is not always the case. So we are gonna delve into that topic about day trading in this video. But first, if you are new to our channel is all about making money, saving money, and investing money on the road to financial independence. Aman and I were on that road for 8 years. We reached financial independence, quit our federal government jobs, and retired early. So if you are interested in any of these topics about making, saving, or investing money, make sure you subscribe to our channel and follow us on Instagram. So with that being said, let's begin by just starting off by discussing what day trading is. So day trading is speculation in stocks and other securities where a person buys and sells those stocks or other securities in the same day. And when we say securities, we're talking about stocks, options, forex, cryptocurrency, stock market index futures, index rate futures, currency futures, and commodity futures.
So you can pretty much day trade anything that is sold on an exchange. But for this video, we are gonna focus on day trading stocks because that is what most people tend to get involved in first when they think about day trading. So day traders are looking for price movement, so they like volatile stocks. The idea is that they are looking for incremental wins. They're looking for a little bit of appreciation here or there, so they're jumping in and out of stocks. Sometimes they hold the stocks for hours, sometimes they hold the stocks for seconds. But their strategy is to consistently get gains over a period of time, and this is how they make their living day trading.
So this leads into the strategies that day traders use when they are day trading stocks. But before we get to that, I really want to make this distinction between investors and day traders because they are very different. When we talk about investors, we're talking about people that are looking at the fundamentals and the financials behind whatever they're investing in. If they're investing in index funds, they look at the historical performance of that index fund. Or if they're looking at individual stocks, they're looking at the fundamentals and the financials behind that particular company. What they're really interested is looking at holding a particular asset for a longer period of time. And that is in contrast to those day traders. The day traders find fundamentals irrelevant. They are not looking at that. They are looking at a lot of volatility in what they invest in, and they are focused on that price movement. So because day traders are focused on price movement, they also focus a lot on charts. They call it technical analysis. And to us, that seems a little deceitful because this technical analysis that they use is just justification as to why they should make certain purchases. We think it gives day traders a false sense of security or confidence when they're day trading. And we're gonna go into more of that false sense of security a little bit later in this video when we talk about the success rates of day traders.
But don't get us wrong on technical analysis. Long-term investors do this all the time when they are making a decision to invest in a stock or an index fund over the long run. I mean, we do it when we are considering all of our investments. For instance, if we are considering investing in the S&P 500 index fund, we look at the historical returns of the S&P 500 and we use that to determine what the future returns will be. But day traders, on the other hand, they are doing this same type of technical analysis, but they are looking at it from a daily perspective in order to identify patterns. And it's these patterns that Christina and I believe give them this false sense of security when they are using these patterns to invest in the stock market. I'm sorry, day trade in the stock market. But anyway, we're getting ahead of ourselves into the cons of day trading. Let's talk about the strategies the day traders use in order to make money day trading stocks.
The first strategy is called scalping, where the day trader attempts to make many small profits based on small price changes throughout the day.
The next strategy is called range trading, where a trader focuses on the highs and lows of a stock and tries to buy and sell within those ranges.
The third strategy is called news-based trading, where a trader focuses on those stocks that are heavily in the news, and because they're in the news, they create a lot of volatility with that specific stock.
And with news-based trading, they try to exploit this volatility by getting little wins here and there in order to make their money for the day. And the last strategy is high-frequency trading. Now, this is usually reserved for the big companies or hedge funds, but there are some individual day traders that have this ability to do high-frequency trading. With this type of strategy, the trader is making almost thousands of trades a day, exploiting little inefficiencies in the market. And we could talk about high frequency trading for an entire hour and you probably still would not understand it, but it is a very complicated form of day trading. So these are just some of the major strategies that people use when they start day trading. But what is most important is that if you are going to day trade, you must have a strategy in place. And along with that strategy, you must have rules in place that will keep you disciplined. What we want to talk about now is how a strategy like this may play out in real life. So we're going to give you a real life example of what a day trader may do with one of these strategies.
So we'll give you an example using a real company and we'll just select Ford. So let's say in the news something happened to Ford. It can be very good, it can be very bad, but whatever happened, Ford is all over the news, and because of that, the price fluctuation for that stock is all over the place, and a day trader wants to take advantage of that. So let's say that this day trader has $10,000 and is going to put all of that money into Ford. Now, let's also say that she buys it at a share price of $12.50. Now, what she can do is she can set up her account so that she sells it at a particular win or sells it at a particular loss. And let's say it's maybe 1% is what she's going for. So if the stock Ford price begins to rise to that 1% mark, once it hits that 1% mark, she can sell it for a profit. But she can also protect herself so that if Ford begins losing value, she can sell it at that 1% price that she has set it for too.
So this is very typical of a day trader. They try to limit their losses and optimize their wins. So they set these parameters up. And the point is to eventually have more wins than losses. This is how you become a profitable day trader. By mounting up all of these 1, 2, or 3% wins over a period of time, and if you're able to consistently do this, you are winning at day trading. Unfortunately, this is not the case in real life. I mean, a lot of people theoretically think that they can do this and get these 1% wins and take $10,000 and turn it into $100,000. Well, this is not what the data shows us with day traders. In fact, a recent study was done and most day traders, 90% of day traders, lose money. Only 10% of day traders are actually successful at day trading.
So 10% is such a small number, but you may believe that you fall into that 10%. And a lot of people, because of what we talked about, that technical analysis, it gives them that confidence that they can be in that 10%. But let's dig a little bit deeper into those successes of that 10%, because there was an even more recent study, a 2019 study, that said that only 3% of day traders are actually making money. So whether it's the 3 or 10%, we want to focus on the actual money that they're making, because this study said that only 1% of day traders are making more than minimum wage. So if you think about all of the potential losses with day trading and all of the anxiety associated with day trading, the result is that only 1% of day traders are making over minimum wage.
So this is a major con with day trading, that even though you are working as hard as you possibly can, in the end, you may only be making minimum wage day trading.
But there are other cons to day trading, and one of those cons is that the success can be cyclical. So maybe someone starts off day trading with a small amount and they see a win. So that gives them a false sense of security, it gives them extra confidence, and then they begin risking more and more money. It's almost like that mentality behind gambling in Vegas. You have one small win, so then you start betting more and more, and those losses get bigger and bigger. But because those losses get bigger, you try and bet more to regain those losses and get wins instead. It can happen over a short period of time with day trading, and you can lose all of your money with day trading.
So basically, when you're day trading, you can get into this rut where you start to throw more money into the market in hopes of getting that money back, a gambler's mentality. The next con is that most day traders tend to follow bad advice. Now, there are a lot of day trading communities out there. Many people come together and they talk about certain investments, and they use a lot of the charting and the analysis that we talked about earlier in order to make these decisions. Unfortunately, because so many people are failing at day trading, they are actually giving each other bad advice.
And the next con is the gamification of investing. A lot of day traders see this as not only a way to try and make money, but also as a game, a way to really test their intellectual ability. And because of that, they constantly want to be seen as that winner. You take on a winner and loser mentality as you're investing, and that really skews the way you invest and how much you invest, and it makes you more willing to take risk as you're day trading.
And the last con that we'll talk about is that day traders tend to borrow money to trade in the stock market. And we just cringe when we hear this. It just sounds so counter to investing. When you are borrowing money to day trade, the hope is that by using larger amounts of money, you can leverage that to make more money. I mean, 1% on $1,000 or 1% on $10,000, which sounds better in theory. Unfortunately, that's not how it usually works out. A lot of day traders end up borrowing money and then losing that money in the stock market, and they are on the hook for that money.
So because of all of these cons, it's our opinion that day trading is a really terrible way to reach financial independence and to retire early. It is not a sustainable type of investment, and it's not even successful for the vast majority of people that are doing it.
But that's just our opinion. But if you are still intent on day trading, here is our advice to you. The first thing is to get your financial house in order before you start day trading. We think that you should be doing this before you start investing in the stock market in any shape or form. But if you have debt, if you have high interest credit cards, if you don't have an emergency fund, make sure you address all of those issues first. The second thing that we recommend is learn the fundamentals about investing. And we have a ton of resources on our channel and in the description below that you can use in order to build a foundation of financial knowledge before you just jump right into the pool of day trading. The third thing is devise an investment plan. Everyone should be investing in the stock market with a plan. That includes if you're gonna be day trading. And finally, we also recommend that before you actually start using your money, you use some play money. So there are websites and different platforms that you can use in order to simulate day trading. This is a great way to see how you would fare if you were really using your own money. By using these simulators, you can hone your skills, you can devise your strategy, and you can also work on your discipline, because it takes a lot of discipline to become a successful day trader.
And actually, I want to add one more thing. If you are going to be day trading, you should really only do it with money that you are willing to lose, because the statistics are clear. The vast majority of people that are investing or that are day trading are losing their money. You can be that top 10% or 1%, but there is a very small chance of that happening. So only invest with money that you are willing to lose. So that is our video on day trading. It is not for us. We do not think it's for people that are pursuing financial independence and that want to retire early. But again, that's our own opinion. You can take this information, do your own research, and see what works best for you. And of course, if you like this video, make sure to give us a thumbs up, subscribe to our channel, and
Join the journey.